So as the big words up there say, we're talking about the future of European exchanges. Before we really kick it off, I want to throw it to you all. This is pretty broad, but what are some of the things that you think the audience needs to know going into this discussion? Like, set the landscape. What is the current landscape of the European exchange market?
From my perspective, at least, we look at regulation ahead as a game changer to some degree. We see a lot of exchanges becoming more tax-oriented, and I believe they're becoming more localized in terms of services, especially in the EU. We service the B2B space, so we serve a lot of small, medium-sized exchanges, and we can see the pattern where there is a great deal of KYC and AML procedures being improved as of now. Something that, to some extent, is sort of new in the industry. I see a lot of diversity within the exchange ecosystem in the EU, and that's my take on that.
Yeah, I would say like there's a lot of exciting innovation happening within the Euro ecosystem. I think like first and foremost, like there's a lot of incredible homegrown players, right, that are offering incredible solutions that really appeal to people locally. They offer the right type of payment solutions, multi-currency wallets, etc. So lots and lots of innovation, I think, is happening for different type of user segments and needs as well. And I would also say sort of more at the broader macro level, like when you think about Europe right now, it claims actually right now to have about 2/3, almost 70% of jobs within the blockchain, in the Web3 space. And actually even when you think about like the developer segment and developers within this space, right now, the number of people working as developers within this space in Europe is actually on par with the US, which used to be about 40%. So right now, like 30% of global roles within the developer space come here from Europe as well. So I think lots and lots and lots is happening. And I also love seeing sort of the diversity of the type of exchanges that we have here. Smaller ones, bigger ones, you've got global exchanges active. Here in the Netherlands, organizations like obviously like B2Broker, but then the very exciting announcement that was made recently, well, not recently, as of last week, the Kraken acquiring Coinbase here as well. So I don't know, there's lots of movement, and for us, like the European region is incredibly important. Like we're making a lot of investments in growing the region here as well. The UK is our largest international market, but like combine that with Europe, like lots and lots of opportunities. So I have very high expectations of things coming, especially from this part of the world.
Amazing.
Yeah.
It sounds all sounds very positive, and I agree. But maybe I would add kind of something negative as well, which is we're in a deep bear market right now, and that's I think also important to set the stage. Like we started 3 years ago in a bull market. We went from like 20K to 69-ish K, and a lot of new users came in organically every day. We didn't have any marketing budget whatsoever, but people were starting to buy Bitcoin because it was on the press and the media everywhere. And so now we're very different times. For like 2 years now, I think a lot of crypto and Bitcoin exchanges are suffering. They're losing a lot of users and volumes. The users that are staying are less active. They are laying off a lot of people. And so it's really hard to be an early stage startup right now and an exchange right now in this industry because we are in a deep and in one of the longest bear markets so far. Just also important to keep that in mind.
Yeah.
So given that, why are you all in the exchange business? It sounds pretty brutal right now. Yeah, things were great 2 years ago, but what brought you all here and what made you stick around?
Well, our story is kind of unique. We had company needs 8, 9 years ago. And it's a long story, but I'll make it very short. We had a situation where one of our customers didn't have the means to facilitate or pay for one of the invoices, and suddenly we ended up with Bitcoin. Funny story was that back then we didn't know what to do with it.
No way.
And that's how we started. It was internally a need. We saw an opportunity and we started building on it. And that's when we started developing tech for the industry. Today I think our project is pretty successful by volume and size. So we are a business of over 422 employees at present. And lots has to do with the growth we've seen in the industry over the years. That's how we ended up in this space.
Fascinating. Well, in case anybody confused me with Brian Armstrong, I'm not the founder of Coinbase, so I did not found an actual exchange. No, my story I think is a little bit different. I've spent my entire career within consumer technology. I actually started off, I'm Dutch, I'm from the Netherlands, so it's amazing, by the way, to see like this conference taking place on my home soil, but also like such a nation where trade is at its core. No, I started off my career at TomTom, which is, for those of you that are a bit younger, like a portable navigation device provider, one of the first ones here. And for me, that was really eye-opening what disruptive technology can do and how it can fundamentally change how people operate within society. From there onwards, I went to Skype. I ended up at Facebook in the end. And then as I've spent a lot of time there, like I was looking for not just the next thing, but the thing that I felt like personally passionate and deeply connected about. And that's when I learned more about Coinbase's mission, right? Like fundamentally, when you look at the traditional financial industry, it's not inclusive at all, right? It's quite exclusive. And the promise that crypto holds, and what the mission of Coinbase is to very fundamentally to give people more power over their finances and to create economic freedom. That really, really resonated. So I then decided to make the jump into this space. It's only 18 months ago, so when to your earlier point, I joined in the bull market. And it has definitely been an interesting 18 months ever since. But lots of learnings and again, like a lot of opportunities as well. And I'm sure we're going to get to that in a point too. Yeah,
Definitely.
that's my story.
That's very promising also to see that this kind of talent, like you, for example, is coming into the industry. I think that's also something that makes me look into the future in a very positive way. And don't get me wrong, I think we are exactly in the right business, and there's obviously going to be ups and downs. It's a new technology, it's a new asset, it's a new industry that's being built. Obviously, there's going to be a lot of volatility, and bear markets are good. It's here for consolidation, it's here for building, and we are actually, despite the bear market growing, which is very, very positive for kind of our niche, this Bitcoin-only non-custodial that we have chosen. And I think if looking towards kind of zooming out and looking into the future in a bit more long term, thinking maybe in decades and not years, this is the fiat to Bitcoin exchange business we are all in, I think is one of the biggest businesses to be in the next decades, because there's billions of people and trillions of dollars that will flow from the old financial system to the new financial system. And if you're a facilitator of that, then there's a very attractive and very, very valuable business to be built.
Yeah, well said.
So Julian, I'm actually interested in digging a little deeper into this, because one of the things that differentiates your company from the two other companies on this panel is you're Bitcoin only, correct?
Yep.
So you're a Bitcoin only service provider focused on buying, selling Bitcoin, but also you focus on self-custody as well.
Yep.
So one, why did you choose that business model? And two, what are some of the benefits, but also maybe what are some of the challenges of hyper-focusing in that way?
Yeah, absolutely. So we actually chose this niche between Bitcoin only and non-custodial, mainly because we think that already now and also in the future, this is the way how we can provide maximum simplicity and user-friendliness to people and make it really frictionless to move from the old world, from fiat money to Bitcoin and back and forth. Because as said, I believe that this is a huge opportunity moving forward in the future. And because we are non-custodial, we don't hold money on behalf of customers. We are definitely less regulated than, for example, custodial exchanges like I think the two of you guys. And also because we're Bitcoin only, which Bitcoin in a regulatory perspective is viewed as a commodity, and all the other altcoins are viewed as securities, or at least will be in the future. This is hinted from the SEC and so forth, and the other regulators in the world will follow. This creates, being custodial player and being an altcoin player combined will lead to a lot of complexity, will increase maintenance effort, will increase cost that the users in the end will feel in higher fees, etc., and less development speed, less user friendliness, and less simplicity for the user in the end, which I believe is the key to bring this simplicity to the people if we want to gain mass adoption from the 4% of the world's population that is now into Bitcoin to, let's say, 50–60%, hopefully in the next decades. I think this simplicity, ease of use, and buying Bitcoin as easy as something like WhatsApp that everyone can use, this is super important, and that's why we chose to get into that niche, because we believe, especially with all the regulations that are coming, as said, if you're into altcoins and if you're a custodial player, it's going to be very hard to achieve that, and that's why we think we have a competitive edge in that. That said, there are obviously challenges. For example, people don't like to hold their funds themselves. They're not used to actually holding their money. They're used to having a bank or credible partner like Coinbase, for example, holding on to their assets. So there's obviously a lot of challenges in making this very easy and user-friendly. You know, people are not, they don't want to write down 12 words and keeping it in several copies in different homes, you know. This is one challenge, for example, amongst many that we need to solve. But I believe in 10 years, these are all technical problems that will be solved, and in 10 years, it will be as easy to hold your own Bitcoin than it is to work with a custodial player.
Okay, I think there's some pretty great contrast here between, a lot of things he said. He said, your business model creates more simplicity, it can lead to better user design, lower fees. So what are some of the choices that maybe you all are making or have made at Coinbase where you've taken a different approach? And maybe what are some of the challenges, regulatory or otherwise, that you all have faced because you're not just Bitcoin only?
Yeah, no, I mean, like, I think, the regulatory challenges are definitely there. I think, like, fundamentally, like, we want to be the bridge and the easiest way into the crypto ecosystem for everybody and anybody, right? Like, we have solutions for people that are crypto, that never bought crypto ever before, or people that are a little bit more advanced. Like, we have a suite of very advanced tools available as well. And we're not just exclusive to retail. Like, we offer services for institutionals as well. We have platforms for developer ecosystem. But yeah, so fundamentally, like, we want to build the best possible and easiest to enter user experience. But regulation is really, really key. And I think the last 12 months have been very evident of that. And it's almost amazing that we're talking about this right now, because I think it was exactly 12 months ago when FTX fell down and the entire industry got properly bruised. And yeah, we've not just us, like, everybody's been dealing with these insanely reputational challenges because of that. A lot of people put their names on the line, and then boom, the entire thing, changed. Very, very credible players turned out not to be that credible. And we at Coinbase have always really, really cheered for regulation. Like, we believe that regulation is absolutely needed in order for this industry to be safe for consumers. We're fundamentally not going to see mainstream adoptions until there's clarity from a regulatory perspective. So we're very pro-regulation. Like, we have been engaging with regulators, policymakers, really from the outset. But it's very fascinating to see, like, how regulation is being treated differently in different jurisdictions. 83% of the G20 and the main financial hubs have either already regulated the sector or are about to regulate the sector. But there's a big contrast with the US out there that is trying to, Grant and I had like a little, not coffee, some water before we started. Like, it's a big contradiction, like, where the US seems to be regulating through enforcement instead of engagement, which, as I'm sure most of you are aware, is interesting. But then if you take a step back and you look at the European ecosystem, I mean, they are setting a gold standard for what regulation looks like with MiCA, which recently got approved, right? Like, one set of rules for 27 countries. You can pick the jurisdiction of choice. That is going to really, really, like, pave an entirely new way of what regulation will end up looking like. What we do believe, obviously, is important, like, as we think of regulation, is that the box that is being drawn does allow for enough space for innovation to still happen as well. So yeah, ultimately what regulation will look like will be slightly different in different jurisdictions, but we're excited for it to come in. I think the UK is also a really great example. Actually, as of last week, the pre-existing financial promotional regime that already applied to TradFi is now scoped crypto into it as well. And it's really trying to ensure consumer protection at its heart. And as complex as that might be for the industry, at the end of the day, we're doing the right thing by consumers. And long term, what I think will likely might end up seeing is more stability within the markets as well because of that regulation that is coming in. So hopefully it will give more people, especially those that aren't as advanced as all of you here and all of us here, the sense that it's safe to engage within this space and that they feel that crypto is part of the financial services for the long run. Yeah.
I think it's a great point. You want people to feel comfortable entering this space. You want them to feel safe entering this space. And bear with me in the segue, but I think one of the complicated things about the space is there are a lot of players that you don't necessarily see as a forward-facing consumer, right? Or the consumer doesn't see these companies because they're not as forward-facing. So, John, I think while we're talking about regulation here and talking about some of the various regulatory hurdles, challenges, you all exist very much on the back end of a lot of these things. You are not just Bitcoin only. I think for me, but also for the audience, it'd be pretty illuminating. What are some things that maybe the average person who's buying and selling Bitcoin doesn't fully understand about like what happens maybe on your end and maybe how regulation or something else that relates to that could affect that buying and selling experience?
I think this is one of the most exciting topics what you just asked, because many people don't realize there are service providers or firms like ours who are behind the scenes. I like to call us silent partners. Not many people know we are behind many exchanges out there from a tech or liquidity standpoint, whatnot. What I do firmly believe, and I see every single day, is there's that gap between traditional finance and the crypto world. One example, and I consider this a very strong key to many businesses, compliance. Let's just take that as the basic example of today. According to jurisdictions, according to the business model you're running, you got to run a certain compliance model. A lot of these companies today are just adjusting to such new norms, which are in the benefit of everyone in the long run. We want to have more credibility, and that only comes through transparency.
Yeah.
The old days are to some extent being challenged. Where are we going from here? Of course, nobody knows, but we definitely see a lot more regulation in the horizon. You must be compliant. That's one of the things we're working on behind the scenes, is all our tech is going to be MiCA compliant before the end of the year. We have no choice but to deliver that to our partners. So I can go on and mention hundreds of examples as such, but compliance remains a key part of every business out there.
I think that really hits the crux of what I think a lot of players in the ecosystem really want to see is we want to know what rules that the industry is playing by, right? That makes my job easier when we're talking to lawmakers and saying, here's how this would affect this type of, this company or the average individual buying and selling. And if we don't have those clear rules, then it's much harder to ensure safety. It's much harder to ensure transparency. And so in the final third of this discussion, I want to shift toward the future. What's coming next? And we can take that a couple different ways. One is just what is coming next definitively, factually, what do we already know is coming next? But two, what do you all want to see? And I think a great example of that is, post FTX collapsing, one of the things that we realized was a lot of the things that they said publicly that they were doing with their business was not actually what was happening behind the scenes, right? We own 80,000 Bitcoin, and actually we have 0 Bitcoin on our balance sheet. Remarkable, slight accounting error.
Yeah.
So how do we mitigate that? One of the potential answers is proof of reserves and mandating proof of reserves for exchanges and other service providers. What are some other things, again, that we are going to see or that you would like to see, let's say in 2023, end of this year, but moving forward, 2024, 2025?
Well, something I definitely would like to see and that we are also already seeing is the trends that a lot of, and I'm sorry to mention that, but a lot of Bitcoin are withdrawn from custodial exchanges and are held in non-custodial ways with wallets, with hardware wallets, etc., and with multi-sig setups, etc. Because especially since FTX happened, this has been accelerating. But actually, since around for 3 years now, we're seeing a trend of more and more Bitcoin and other cryptocurrencies being withdrawn from exchanges. And actually, we are now at around, I think, 12% of the Bitcoin supply that is held on exchanges, which is at around the same level that we have seen pre-2017. So in the last 6 years, definitely there has gone up a bit, and then now it's down again to like very early days, basically. So we see this trend, and I feel like in the next 10 years, this trend will only go on and on, as you said, because there's no counterparty risk if you do it like that. You don't have to trust an FTX or any other provider that they actually hold the Bitcoin that they tell you that they hold. I mean, for example, Coinbase, you're highly regulated, and there most people trust you. But then I think it's about eliminating the need to trust. Some still will want to do that. So I see like 3 ways how people will access the Bitcoin technology. One is through a pure decentralized and peer-to-peer and non-custodial way, and that's where we are focusing on. And then the second is through custodials, because they want to have a trusted party that holds but because of a need, not because they have to. So they work with banks and regulated exchanges like Coinbase. And then last but not least, some really want basically paper Bitcoin, like an ETF, and that's why it's also important that the ETFs are coming next year from BlackRock, etc., because the real big players, the real big institutions, like endowment funds, pension funds, and big hedge funds, they will want to have this way of holding the asset. But it's good that there are these different ways how to get into it. What I would like to see is that the trend is obviously moving more into the direction where people will want to hold the asset, the Bitcoin themselves, so they don't have to trust any counterparty, and they have full 100% transparency that they also can validate and verify themselves.
Great.
Well said. That's a tough act to follow, no? No, I think very, very simply put, like, we want to see as many people engage within this space as possible. If it's through centralized or decentralized exchanges, like, the more people that engage in the ecosystem, the better. The more it gets normalized, the better. And it isn't just good for business, like, it's better for the promise that ultimately crypto holds. So yeah, I think ultimately, like, that is the main thing that we want to see. And I think that would also unlock stronger use cases for crypto across the board. When you think about why do people tend to invest in crypto in the first place, and predominantly Bitcoin, like, it tends to be investment driven, while the promise of what crypto holds is so much bigger than that. And I think the more people that engage, the more utility can basically be unlocked from this ecosystem, the better overall, the better for the world. Like, we were talking about this a little bit earlier as well, about traditional finance, and like when you start delving deeper into traditional finance a little bit more as well, like, most of us probably here are like super fortunate to be able to engage within traditional finance, right? Like, we tend to be in developed markets, we have access to bank accounts, we have access to credit, insurance indirectly as well. But when you take a step back and you basically look at the number of people that are unbanked, like even in the US, that's something like 5%. That's super high. Like, hundreds of millions of people around the world, like, generally do not have access to basic financial tools, which in order to actually, build is totally necessary. And that lack of inclusion, which is why I joined this place in the first place, like, I think is deeply concerning. So the more people we start engaging in the space, the more normalized it will get, the more change we're going to see, and then hopefully a world where economic freedom ultimately ends up being a true thing. So that's sort of like the macro perspective. I think more shorter term, like, I think I'm very excited to see broader engagement from traditional institutions as well. The comfort that hopefully they're getting into the, like, evolving further within the digital asset space as well. It's good for you, it's good for us, it's good for the greater industry. Again, like, seeing the BlackRocks of this world engage, like, that does well by consumers, does well by institutions. So seeing that shift happening a little bit further as well is something that we're excited about. And then obviously, like, all of the amazing things that end up getting built through the developer ecosystem. Within Web3 is going to hopefully unlock some of these use cases. So lots to look forward to. Yeah.
John, anything to add?
I think I would like to see ETFs get approved. The reason being, we will see price action. A lot more adoption, I think, is inevitable. It's only a matter of time. We've seen that before, historically, when, 4 or 5 years ago, the amount of users that were in the space was totally different than what we have today. So there's a lot more awareness, and that ETF, I think, it can be the next catalyst towards that additional adoption we need.
What I love about this panel, as we're coming up against time here is you have this push and pull, this dichotomy of who do you trust, and do you trust yourself or do you trust an institution? And I think a through line of what we've been talking about is, Julian, you said it, you need it all. You need different options because different actors are going to want different options for how they custody their Bitcoin, how they buy and sell their Bitcoin, all of these different things. But clearly, with an FTX-like situation, companies are not always going to act in the consumer's best interests. And so what we've been seeing, with regulation that is on the horizon or has already been enacted is it is actually reducing that barrier of can I trust this company that I'm working with, is instilling that into law, into regulation. And Elke, it sounds like you think that is necessary for people to enter this space and feel like they trust it because the last thing I'll say here is I think many of the people at this conference, many of the people listening to this right now, they are predisposed to the idea of, don't trust, verify. The vast majority of people in the world are much more used to finding an institution that they have some level of comfort and trust, whether that's through laws, regulation, transparency of that organization, whatever it is that allows them to say, I trust them, I want to work with them. And so it sounds like moving forward, whatever regulation, whatever we see in the future of exchanges is going to have to navigate that fine balance of how do we get people to trust working with us? How do we get the 95% of the rest of the world, a 96% to buy Bitcoin? Well, you only do that by increasing that trust of what companies, what organizations they're working with. And so I want to thank you all for being here, for speaking. I want to thank you all for sticking around for the last panel. That is it. We got closing remarks, and the Bitcoin Amsterdam is done. So why don't you give it up for these people, and then you can get out of here. Thank you, everybody.